Hi guys, in this quick TA session I'm going to teach you a very simple method on how to find high momentum moves. And to do this, I am on the 30-minute chart right now, lower time frames. And what we are going to do is to look for a sideways trading range. For example, this one, as you can see over here. We have some sideways price action. We can connect the lows and highs with trend lines and see that it's some kind of parallel channel running through this area. It's effectively finding its end over here when price made a lower high and didn't reach the top of the channel. So it actually failed to maintain the structure, and it broke out of it to the downside and initiated a downtrend to the lows, to the swing low region over here. So what we're going to do here is to look at the Bollinger Bands indicator, because it can be very helpful in telling you when we have a change, when we see a change in a price action, when there's a stronger momentum, and when we have to adapt with our trading. For example, a lot of traders are very good in trading sideways ranges. They trade the lows and highs of a range very effectively. But once price really starts trending out of the range, it could happen that a lot of people get wrecked on these moves simply because they try to trade these trending phases exactly the same as they did while price was going sideways. So, and this is something that, a good trader tries to avoid. Simply because it's necessary to adapt to changed circumstances, and Bollinger Bands are a very nice tool to actually show us that a change is taking place and what kind of change. And to properly analyze this, I'm going to use the standard Bollinger Bands indicator on TradingView, and here it is. And now I'm going to change the settings. I'm using standard deviation of 2.5 and a length of 50. This is what I want to set the Bollinger Bands to. And as you can see, they become broader, less volatile because they take in more data and are more stable, like a moving average, because they're based on a moving average, of course. And it's now the moving average 50 on the 30-minute chart, which is running through the middle here, like this. And this indicator can tell us a lot about the momentum in the market. First of all, it tells us about volatility. The bands react to volatility, but it also tells us about the strength and what to expect from a move. And if we combine the knowledge on Bollinger Bands together with the knowledge on price action and patterns, we can find the exact spots, the exact times in the market when we can expect a change in circumstances and when we have to adapt. So we have the perfect timing. Now look at this range, at this parallel channel. You can see that the Bollinger Bands, they are wiggly, moving around this region as well. They are circling around this trend line here, which makes sense because both is confluent with each other, and it's a resistance range we have up here. It also matches with this resistance range of this swing high region over here, as you can see. So there's a lot of confluence in the markets at any given time, in given point in time, and this is no exception. We do have the same at the bottom. As you can see, the Bollinger Band somewhat align with this trend line down here, and we also do have this swing low support region where it bounced from, and then it made a higher low. It actually bounced from the swing low region here. So this is normal for uptrends and patterns. So you have this bit of price action in this region here, and as you can see, at the moment, or from the moment on, this pattern, this channel is broken at this point. We give this a different color. So it is broken at this point. You see that we have a candle close below on the 30-minute chart, and price starts to trend down. And you can see the bands are now turning down very sharply. They become very, very sharp declining here up to this point where it becomes a little bit flatter here. So you can see that price approaches the band and then it tries to bounce because there's support here. But this support fails to hold price up and the continuation down occurs several times. We do have some legs down until price finally finds a very strong support level, bounces from that. But you can see the bands are still turning down. So there is still momentum to the downside. And this is something that you often can't see simply by looking at the chart. So Bollinger Bands are a very nice tool to tell you about these things. And they make it very easy for you to analyze what to expect from this move. Let me give you an example by doing a rewind to this point. Now you can see we are shortly before the breakout here. And sure, it could have bounced here. It could have bounced higher at this point. However, we had this sign of weakness. The structure was clearly invalidated. And this usually means that when we have weakness by the bulls here to reach the resistance, we will have strength by the bears. And this will go lower. So we can expect this move outside of the structure, but we don't know what to expect. There's still this sideways Bollinger Band down here. It could simply produce a failed breakout and then go higher again. This is something that we see very often. So we're completely uncertain at this point what to expect. Now let's see what price action tells us. Going to play this maybe a little bit faster. Okay, here you got the breakout. This is the breakout. You see this candle closed above and it held support, but this candle clearly closed below support. And yeah, there's no denying that this is a breakout attempt by the bears. Of course, this has to be confirmed, and there are multiple ways to confirm this, either by trading outside of this range for a while, so to see several candle closes outside, or we see some kind of bearish retest. So an approach to resistance with rejection. This would be a confirmation of resistance and confirmation of the breakout as well. But right now, as you can see, we are exactly at the point where we don't know what will happen. It could get back above, it could find support down here, it could simply go sideways. But let me say this, once we see several candle closes outside of the trading range we have here outside of this pattern, we can expect momentum to build. In most cases, we see momentum building down. This is because of breakout traders joining in. They are going to short this. When price approaches the resistance from below, we can expect breakout traders to short this heavily. And of course, we have people de-risking. A lot of people went long here and here and here, and all of these are, or a lot of these are de-risking by selling their longs early or getting stopped out here in this region. So this is the moment in time when we can expect downside momentum to build on this breakout. It doesn't always happen, simply because there are cases when you have very strong support down here and whales simply create so much buying pressure to compensate for all the downside momentum that is building. And they overcompensate this downside momentum and push it back up, produce a failed breakout, and then you have the exact opposite situation in which the bulls come back in, shorts are being closed again, and so on. Okay, but let's look what happens. Okay, so now you can see this downside momentum is building on this move down, and it is crushing into these bands, and these the bands are turning down. And this is the moment when you have confirmation that we can expect this momentum to be maintained for a while. So this means that we can expect in the next hours, because this is a 30-minute chart, we can expect in the next hours that this downside momentum will be maintained by the bears, and that they will try to push this lower here in this region. And it is very likely to happen. Although the downside pressure is not always the same as the actual downside price action, because pressure is just the force, but this doesn't tell you how much of an effect this force actually has on price action. So there can be a difference. You can see sideways like this, but there's strong force from there's a strong downside pressure, but price is still going sideways like this and then falling down. This is something that we see very often. This means there's strong support, but the pressure is becoming stronger and price is pushed down in this descending triangle fashion. Something that we see very, very often. Yeah, and this is something that can play out here as well. So from this point on, you know that you have to expect this. And the confirmation is that these bands on the 50 length 2.5 are attacked by bears here. So we can expect this move to be to last at least for a few hours. And as you can see, we have this fighting back by bulls here at support. Of course, they want to buy this support, but ultimately they fail to do so because we have this breakout momentum. They are too weak at this point. And this kind of very large pattern that has failed to play out in a bullish way is now playing out in a bearish way. So we have this bit of price action spanning 3 days. And it would be very strange for bulls to catch the breakout here after it is confirmed and then reverse the trend. So at this point, we can be very confident that it will go lower. And this is what actually happens here. It's digging down to the downside, deeper and deeper. And there are occasional bounces like this. And this is what I want to emphasize here. You will often see in a downtrend, especially when there's support and this is an accumulation range, you will often see these sharp bounces. But look at the bands. They are still going down drastically. They are very sharp. The trajectory is sharp to the downside. So we can expect this move to continue. Even if you see a sharp bounce, the momentum is strong enough that this will come crashing down again. Crab legs. Like we will see crab legging to the downside. You can gain more confidence that these bounces are successful when the bands start going sideways. If you see something like this happen and you see a bounce like this, which usually coincides because there's these bands can only start to go sideways when the downside volatility is compensated by upside volatility, or the move down it's slowing down. Then the bands will start going sideways, and this is the moment when you can expect maybe a bottom to play out, or we see a sharp bounce that could be sustainable. However, as long as the bands go down like this and you see even a strong buyback, it can get sold off very, very fast and vigorously by the bears. So be careful of that. And now let's see what happens. Now we got a very, very drastic up move. You can see that the bands now immediately start to go more sideways than down because the downside momentum has been compensated for by this move. And now bulls actually have a chance to establish a sideways range and go higher from here. This is the chance they got here. And let's see what happens. Yeah, it's going sideways for a while. So bulls are trying to make this a bottom, as you can see, but the bands are starting to look, they are starting to go down again. They try to go sideways and now they are going down again. This means that the momentum to the downside is still there. And as you can see, the trend continues lower. And now you got it. They are going sideways again because of this bounce. Now they got a second chance to make this a bottom. Yeah, and they at least reach the moving average, do some mean reversion, and then whatever happens. So this is what I wanted to talk about. It's a simple technique. Use the Bollinger Bands 50, 2.5. You can try this out on various time frames, and you will see right now on Bitcoin. Look where price action is. It's currently pressing the bands to the downside, so we can expect more downside price action here, according to this technique. Will it happen? Not necessarily, but we have to be very careful because this is a situation in which downside momentum is being built and where bears have the upper hand. So it is possible, even if we see a strong bounce, that it gets sold off immediately, like in this case. Be careful of that, and this technique might help you in a very simple way to estimate risk and maybe even reward chances. I think it's very useful. Try to play around with this. Bollinger Bands have a lot to offer, and they are very, very useful. Yeah. Thanks for watching, and yeah, see you next time.